Hello students, in present video I am going to explain about first problem from bills of exchange topic. I am taking this question from BCom first year financial accounting 2 subject semester 2 Pankaj publications book. So on bills of exchange topic I made some more videos. Those videos links are available in the description box. Let us see the question first. On 1st January 2014, Anil sold goods to Naresh for 8,000 rupees. Naresh paid 20% cash immediately after deducting cash discount of 2%. For the balance, Anil drew a bill payable after 3 months. On the due date, the bill is honored. Pass journal entries in the books of both the parties. This is the question. Let us see the solution for this. On 1st January 2014, Anil sold goods to Naresh for 8,000 rupees. So Anil is a seller, Naresh is a buyer, customer. Then on the same day, Naresh wants to settle 20% of this 8,000 rupees. So 20% of 8,000 rupees is 1600 rupee. And how Naresh wants to settle this money? With a discount of 2%. So discount is how much? On 1600, 2% is 32 rupee. Then finally, how much cash Naresh is paid to Anil? 1600 minus 32 rupee, 1568 rupees. So on 1st January 2014, Naresh paid 1568 rupees to Anil. And there is a discount of 32 rupees. For Anil, this 32 rupee discount is discount allowed, loss. For Naresh, this 32 rupee discount is discount received, profit. Then what about the remaining amount? 8,000 rupees minus 1600, 6,400. So for this amount, on 1st January 2014, Anil prepaid a bill on Naresh for 3 months period and he received acceptance on that bill. So bill amount is 6,400 rupees. And for this bill, Anil is called drawer because he is preparing that bill. He is drawing that bill. And Naresh is known as drawee because on Naresh only this bill is prepared. So 3 months period is known as term of the bill. So from 1st January 2014 bill drawn date, if you count 3 months, then what will be the date? 1st January to 1st February 1 month, 1st March 2 months, 1st April 3 months. So to this 1st April date, we have to add more 3 days. So these 3 days are known as grace days. From second date we have to count. So 2nd, 3rd, 4th. Then 4th April 2014 is the payment date. So this date is known as due date of the bill. On this date, Naresh has to pay the money. During these 3 months, Anil can treat with this bill in 4 ways. First one, he may retain the bill with him till the due date. Second, he may discount the bill with the bank. Third, he may endorse the bill to his creditor. Fourth, he may send the bill to bank for collection. And in question, he is not giving that bill is discounted, endorsed, sent to bank for collection. When these 3 words are not given, discounted, endorsed, sent to bank for collection, then the meaning is bill is retained with the drawer till the due date. So on the due date, Anil, drawer, went to Naresh, drawee. And Naresh may pay the money, Naresh may fail to pay the money, no? So if Naresh pays the money, that is known as honor of the bill. If Naresh fails to pay the money, that is called dishonor of the bill. And in this question clearly is giving that on the due date bill is honored. So for these transactions, he is asking us to prepare journals of Anil and Naresh. This is a question. Let us see the solution for this. See, solution roughly I'll explain on the board because clearly I cannot write everything on the board now. But neatly on a paper again I will show the solution to you. So first we prepare journal of Anil. Anil is drawer now, in brackets clearly mention that. So journal format, date, particulars, LF number, ledger folio number, debit and credit. So now we are preparing journal of Anil now. Therefore all transactions we have to analyze from Anil's point of view. Our assumption is we are working as an accountant in Anil's firm. So first what happened? On 1st January 2014, Anil sold goods to Naresh for 8,000 rupees. First transaction is sales. For that, one entry we should write. Next, what happened? On the same day, Naresh paid 1568 rupees cash to Anil, and Anil is allowing a discount of 32 rupees. So for this cash receipt, we have to write one journal entry. Next, on the same day, for the remaining amount 6,400, Anil prepared a bills of exchange. So he presented that bill to Naresh. Naresh accepted this bill. So for Anil, this bill is called bills receivable asset. For Naresh, this bill is called bills payable liability. So for receiving acceptance on a bills of exchange, we have to write the third entry. Then finally, what happened on the due date? Bill is honored. Means Naresh paid the bill amount 6,400 to Anil. So for these four transactions, four journal entries, one by one we have to write in Anil's journal. First entry is for sales. See, on 1st January 2014, in Anil books, Anil sold goods to Naresh on credit. So from Anil, goods are going to Naresh and nothing is coming from Naresh. So this cash is 1568. In second entry, we will write about that. While writing the first entry, our assumption is these are credit sales. So to write the journal entries, there are some steps. First step is we have to identify the accounts involved in the transaction. So any transaction contains minimum two accounts. These two accounts first we have to identify. Here to Naresh we are selling goods now. Therefore Naresh account is one account. A by C is the symbol of account. From Anil goods are going. Therefore second account is goods account. So first step is completed. Identification of accounts completed. Next step is grouping. See, accounts are divided into three types: personal accounts, real accounts, nominal accounts. If any account is opened with a firm name or person name, that is called personal account. If any account is opened with an asset name, that is called real account. If any account is opened with the expenditure name, loss name, income name or gain name, that is called nominal account. So we have to identify these two accounts come under which category. Naresh account. Naresh, person, no? With a person name, if you open any account, that is personal account. So Naresh account is a personal account. Goods account. Goods means asset. So all assets are real accounts, no? Therefore goods account is a real account. Second step is completed, grouping. Then third step is apply the double entry principles. So for personal account, double entry principle is debit the receiver, credit the giver. For real account, debit what comes in, credit what goes out. So for nominal account, debit all expenses and losses, credit all incomes and gains. Now these principles you have to apply here. So personal account principle, debit the receiver, credit the giver. Here we are giving goods to Naresh. Naresh is a receiver. So first line is applicable, debit the receiver, debit Naresh account. Real account rule, debit what comes in, credit what goes out. Here from Anil goods are going, so second line is applicable, credit what goes out. Goods are going now, we have to credit goods. So goods word directly we should not write, because this goods word comes in four circumstances. In case of purchases, sales, purchase return, sales return. If you write only goods, no clarity about the transaction, no? Therefore instead of writing goods word, write on the transaction. This is sales transaction, no? Therefore sales account we have to credit. So final entry is Naresh account debit to sales account. Amount 8,000 rupees in debit column and in credit column. And you should know one more point. Debtor is an asset and asset shows a debit balance. Creditor is a liability, liability shows a credit balance. So while writing the journal entries, not only double entry rules, even these points also sometimes we use. Debtor means who? A person who is liable to the firm. He has to pay money to us. Creditor means firm has to pay money to that person. So debtor is an asset because money should come. Creditor is a liability because we have to pay the amount to him. Here, if you observe this entry, we are debiting Naresh account. So a person account we are debiting because that person is a debtor to us. We are giving goods to Naresh. No? Naresh has to pay 8,000 rupees to us. Therefore, to Anil, Naresh is a debtor. That is why Naresh account is debited. And after completing this first entry, if you see Anil's balance sheet, what happens? What is the effect of this entry? Asset side, debtors, 8,000 you can see. Because from Naresh, 8,000 should come. Journal of Anil. In brackets, you mention that Anil is a drawer. Date, particulars, LF number, debit, credit. On 1st January 2014, first entry is Naresh account debtor to sales account. 8,000, 8,000. Narration being goods are sold on credit. Now come to second transaction. On this date, from Naresh, 1568 cash is coming to Anil. And Anil allowed a discount of 32 rupees to Naresh. For this, we'll write the second journal entry. So we are preparing journal in Anil books now. Think from Anil's point of view. From Naresh, 1568 cash is coming and Anil is allowing a discount of 32 rupees to Naresh. So first step in writing journal entry is what? Identifying the accounts. Here, cash is coming from Naresh. Therefore, cash account is one account. Anil is allowing discount, no? 32 rupees. So discount allowed account is one account. You can write only discount account also, no problem. Then this cash is coming from Naresh now. Third account is Naresh account. In this transaction, 3 accounts are there. Second step, grouping. Cash, asset. All assets are real accounts. Discount allowed. For Anil, this 32 rupees loss, no? So losses come under nominal account. Discount allowed account is a nominal account. Naresh account, with the person name, if you open any account, that is personal account. Second step, grouping is completed. Now third step, apply the double entry rules. For real account rule is debit what comes in, credit what goes out. Cash is coming, therefore debit what comes in. First line is applicable. We have to debit cash account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. This is loss, therefore we have to debit. Personal account rule, debit the receiver, credit the giver. Naresh is giving cash and Naresh is receiving discount. You will get a doubt here. So Naresh is a receiver, giver both. Here for highest amount for 1568, Naresh is a giver, no? Therefore, we should consider a giver only. Naresh is receiving discount, but discount amount is 32 rupees only. So give priority to the highest amount. For highest amount, Naresh is a giver. Therefore, credit the giver is applicable. We have to credit Naresh account. No need to change any word. As it is, we can write. So what is the final entry? 2 accounts we are debiting, 1 account we are crediting. Cash account debtor, discount allowed account debtor to Naresh account on the same date. Cash account debtor. For cash, how much we have to write? 1568 in debit column. Discount allowed account debtor, 32 rupees in debit column to Naresh account. Total in credit column, 1600 rupees. What is the effect of this entry on balance sheet? See, now Naresh is not a debtor for 8,000 because in 8,000, 1600 rupees is settled. So now debtor becomes 8,000 minus 1600, 6,400 only. And how much cash is coming? 1568. Cash is an asset, no? Asset side, we have to show that. So in first entry, we debited Naresh account with 8,000. In second entry, we credited Naresh account with 1600. So in this 8,000, if 1,600 is cancelled, then the remaining amount is 6,400. So for 6,400, there is a debit balance in Naresh account. Means what? Naresh is a debtor for 6,400. That only I wrote on asset side. Second entry, on 1st January 2014, cash account debtor 1,568, discount allowed account debtor 32 rupees, to Naresh account 1,600, being cash received and discount allowed. Now third entry is for receiving acceptance. Date is same, no? 1st January 2014. Naresh is a debtor for 6,400 rupees. If we have confidence on him, then we don't require any written proof. But here Anil wants a written proof on Naresh. So Anil prepared a bills of exchange and received acceptance from Naresh. So what happened here? Debtor asset is converted into another asset, that is bills receivable. Why bills receivable is an asset? Because on this bill in future money should come. So in Anil's balance sheet, debtor asset we have to cancel, and with the same amount 6,400, a new asset bills receivable we have to create. Because both we cannot write now. If you write a debtor 6,400, bills receivable 6,400, then the meaning is 2 times Naresh has to pay 6,400, which is wrong. So same Naresh debtor is converted into another asset, bills receivable. Therefore, when you want to show that a new asset, bills receivable, that old asset debtor we have to cancel now. How we created debtor asset account? By debiting Naresh with 6,400. How to cancel? By crediting. Therefore, Naresh account we have to credit. Already 1,600 we have cancelled by crediting Naresh account in second entry. Now remaining amount 8,000 minus 1,600, 6,400 also in third entry we are cancelling. Therefore, in credit column 6,400 we should write. And a new asset known as bills receivable we have to create. So asset shows a debit balance now. Therefore, if you want to create that asset account, we have to debit it. So bills receivable account we have to debit. This is a final entry. Bills receivable account debtor to Naresh account. Amount 6,400. So for receiving acceptance from drawee, this is an entry. Third entry is also on the same date. Bills receivable account debtor 6,400 to Naresh account. Narration, being acceptance received on a bill. Now come to the last entry. On due date 4th April, bill is honored. Anil went to Naresh and Naresh paid the bill amount to Anil. For that we have to write the journal entry now. In books we wrote that on Naresh we wrote a bill, on that 6,400 should come. Now money came now. Means there is no bills receivable with us. We have to cancel bills receivable. How we have created this bills receivable asset? By debiting in third entry. How to cancel that? By crediting. Therefore, on the due date, while writing honor entry, bills receivable account should be credited with 6,400 rupees. And which account we have to debit? From Naresh, cash is coming to us. So cash is an asset. So assets are real accounts. Real account rule, debit what comes in, credit what goes out. Cash is coming now, therefore debit cash account. Final entry is cash account debtor to bills receivable account, amount 6,400 rupees. On due date 4th April 2014, cash account debtor to bills receivable account 6,400 rupees. Narration, being bill is honored. Now come to the last entry. On due date 4th April, bill is honored. Anil went to Naresh and Naresh paid the bill amount to Anil. For that we have to write the journal entry now. In books we wrote that on Naresh we wrote a bill, on that 6,400 should come. Now money came now. Means there is no bills receivable with us. We have to cancel bills receivable. How we have created this bills receivable asset? by debiting in third entry. How to cancel that? By crediting. Therefore, on the due date, while writing honor entry, bills receivable account should be credited with 6,400 rupees. And which account we have to debit? From Naresh, cash is coming to us. So cash is an asset. So assets are real accounts. Real account rule, debit what comes in, credit what goes out. Cash is coming now, therefore debit cash account. Final entry is cash account debtor to bills receivable account, amount 6,400 rupees. On due date 4th April 2014, cash account debtor to bills receivable account 6,400 rupees. Narration being bill is honored. Anil's journal is completed. Now come to journal of Naresh. Journal of Naresh. Naresh is drawing, no? Mention that in the brackets. Date, particulars, LF number, debit, credit. So now we have to observe all the transactions from Naresh point of view. Because we are writing journal entries in Naresh books. So our assumption is we are an accountant of Naresh. See, from Naresh point of view, first what happened? On 1st January 2014, Naresh purchased goods from Anil for 8,000 rupees. So for these purchases, we have to write the first entry. Next what happened? On the same day, Naresh paid 1568 money to Anil and Naresh received a discount of 32 rupees. Then on the same date, for the remaining amount 6,400, Anil prepared a bill. He presented that bill to Naresh and Naresh is giving acceptance on that bill. So for giving acceptance, we have to write the third entry. So for Anil, that bill is bills receivable. For Naresh, this is bills payable. Because in future, he has to pay the money on this bill now. So bills payable is a liability. Then on the due date of the bill, bill is honored. Means on due date, Anil came to Naresh and Naresh paid the money to Anil. So for these 4 transactions, 4 journal entries we are going to write now. First entry is for purchases. So on 1st January 2014, Naresh is buying goods from Anil. So from Anil, goods are coming to Naresh. On the same day, he is settling 20% of this 8,000. For that, we will write second entry. First, for this 8,000, we will write the entry. See, 2 accounts we have here. To Naresh, goods are coming. Therefore, goods account is one account. From whom? From Anil. Therefore, second account is Anil account. So, identification of accounts. First step is completed. Second step, grouping. So, goods account is a real account because goods come under asset. Real account. Anil account with person name we are opening now. This is a personal account. Then last step, apply the double entry rules. For real account rule is debit what comes in, credit what goes out. Goods are coming to Naresh now. We have to debit goods account. For personal account, rule is debit the receiver, credit the giver. Anil is a giver. He is giving goods to us. So Anil account we have to credit. And goods word we should not write directly. Because in 4 cases goods word comes now. Purchases, sales, purchase return, sales return. So for clarity, we have to write the actual transaction. So this is purchase transaction now. Therefore, instead of goods word, write purchases word. Then what is the final entry? Purchases account debtor to Anil account. Purchases account debtor to Anil account. Amount same, 8,000 rupees. Journal of Naresh. In brackets mention that Naresh is a drawee. Same columns. First entry, on 1st January 2014, purchases account debtor to Anil account 8,000 rupees. Narration, being goods are purchased on credit. Now second entry is for 20% settlement now. So Naresh paid 1,568 rupees to Anil on the same day and Naresh is receiving a discount of 32 rupees. For that we will write the second entry. Think from Naresh point of view. Naresh is giving money to Anil. Therefore, Anil account is one account. From Naresh, cash is going now. Cash account is one account. And Naresh is receiving discount. Therefore, discount received account is one account. Instead of discount received account, you can write discount account also. First step is completed, identification of accounts. Second step is grouping. Anil account is a personal account. Cash, asset no, therefore real account. Discount received, gain. So gains come under nominal account. Last step, apply the rules. For personal account rule is debit the receiver, credit the giver. Here, for cash, Anil is a receiver. For discount, Anil is a giver. Anil is giving discount, no? So cash amount is more, 1568 when compared with discount amount, 32 rupee. Therefore, we have to give priority to cash. So for cash, Anil is a receiver. Therefore, first line is applicable, debit the receiver. Anil account we have to debit. Real account rule, debit what comes in, credit what goes out. From Naresh, cash is going, second line is applicable. We have to credit cash account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. To Naresh, this discount is gain. We have to credit. So final entry is Anil account we should debit, cash discount received accounts we have to credit. Anil account debtor to cash account to discount received account. Cash 1568 in credit column, discount received 32 rupees in credit column, two amounts total in debit column 1600 rupees. Now let us see what is the effect of these two entries on balance sheet. First entry, we have credited Anil account. So personal account we are crediting, means that person is a creditor. So we have to pay money to Anil, no? Therefore, in our books we have to show Anil as a creditor. Creditor is a liability. Therefore, liability side, creditor 8,000 rupees. In second entry, we have debited Anil account with a 1600. Because 20% of this 8,000 we have settled. No? Now Anil is not a creditor for 1600 rupees. So we have to cancel 1600 from Anil account. So Anil account is credited with 8,000, debited with 1600. Means in this 8,000, 1600 we are cancelling. Now after this second entry, Anil is a creditor for 8,000 minus 1600, 6,400 rupees. Second entry is also on the same date. Anil account debtor 1,600 rupees. To discount received account 32 rupees. To cash account 1,568 rupees. Now come to third transaction. Acceptance is given by Naresh. See, on this date for the remaining amount 6,400, Anil prepared a bill. He presented that bill to us and we are given acceptance. A new liability known as bills payable is created. So if there is no bills of exchange, then for this 6,400, Anil is a creditor. In our books, as a creditor, we show this 6,400. Now for this 6,400, we have given acceptance on a bill. So what happened? This creditor liability is converted into another liability known as bills payable. So creditor liability we should cancel and a new liability bills payable we have to create in that place. Both we should not write. So creditor and bills payable, both if you write on liability side, then the meaning is 2 times we have to pay 6,400 rupees to Anil, which is wrong. Then how to cancel creditor account? In first entry by crediting we have created creditor account. If you want to cancel, you have to debit. Therefore, Anil account we have to debit. With how much amount? Already in second entry we have debited Anil account with 1,600. Means in 8,000 already 1,600 we have cancelled. Now the remaining amount in Anil account is 6,400 credit balance. Now that amount we are cancelling now. Therefore Anil account should be debited with 6,400. Now Anil account is closed. And a new liability known as bills payable we have to create now. So liability shows a credit balance now. Means we have to credit bills payable account. to bills payable account. So what is the effect of this third entry? Creditor liability will get cancelled. In that place, with the bills payable, a new liability appears. For third entry is also date is same. Anil account debtor to bills payable account 6,400. Narration being acceptance is given on a bill. Now come to the entry on due date. For honor, journal entry in Naresh books. Naresh paid bill amount. Now for this 6,400, Anil is not a creditor to us because we paid the money. Means this bills payable liability we have to cancel. No? How we have created this liability? By crediting. How to cancel? By debiting. Therefore, bills payable account we have to debit with the same amount 6,400. Which account we should credit? We paid cash to Anil. No? So from Anil, Naresh, cash is going. Cash is an asset. Asset comes under real account. Real account rule, debit what comes in, credit what goes out. Cash is going now. Therefore, we have to credit cash account with the same amount, 6,400. Fourth entry is on the due date, 4th April 2014. Bills payable account debtor to cash account, 6,400. Narration being bill is honored. So, Anil journal, Naresh journal, both are completed. Take the screenshot of Anil and Naresh journals. So this is the end of present video. Hope this video is helpful to you. Thank you.